It's that time of the year when we reflect on what happened and try to predict where we're headed. Today we're diving into the year-end real estate market update. Buckle up because today we're covering national averages, local markets, everything from home prices and inventory to recession fears and what's happening in major cities across the country. Let's dive in. Let's start with the national Case-Shiller index adjusted for inflation. Why do we look at it adjusted for inflation? Because inflation has been on a wild ride the past 4 years. And if you're looking at unadjusted numbers, you're missing the big picture. National home prices, when adjusted for inflation, show that home prices are at a historical all-time high. By the way, it's at an all-time high whether we're looking at the adjusted or unadjusted Case-Shiller index. This tells us that home prices are at an all-time high, and that's just the beginning. Inventory levels have been increasing. As of November 2024, total housing inventory is about 950,000 according to this Fed chart. And as of November 2024, US home prices have also shown consistent growth for both month over month and year over year. Month over month for November 2024, home prices increased by 0.5% from October, marking the third consecutive month of such growth. And year over year, November 2024, prices were up 5.7% compared to November 2023, representing the smallest annual growth since October 2023. Even though prices have been increasing still, we have to consider that prices have been at an all-time high and we're due for a recession. And even though prices have been increasing, builders all over the United States have been helping buyers to buy down interest rates. That's really a discount if you think about it, except it does not show on the comps. And if builders don't do that, we'll have a lot less transactions and lower prices would show on comps. It's like an unreported discount. So prices are not really that anymore. According to Mortgage News Daily, existing home sales data is published monthly by the National Association of Realtors. According to this, the amount of real estate sales have been falling since 2020. And right now, the number of real estate transactions is comparable to 2008, 2009. All right, let's dive into something that's been hitting every home buyer. Interest rates. We've all seen it. Interest rates have been trending up recently. If you've been watching my channel, I did tell you to stop listening to those agents and mortgage brokers telling you mortgage rates are going to go down just because the Fed is on a rate cutting cycle. The 30-year mortgage rate don't usually follow the Fed funds rate. It usually follows the 10-year treasury. So when 10-year treasury yields go up, 30-year mortgage rates typically follow suit. And boy, have been they following. All right, we'll talk about what's happening in real estate based on national averages. Now let's talk about what's happening on submarkets. Let's talk about the major metro areas in the United States. This is the Case-Shiller index by city. We have the 20 major metro areas right here in the United States. We have Phoenix. As you can see, it's still on an all-time high, just like the national Case-Shiller index. But it's kind of been flat for the last, since maybe 2021 or 2022. It's been flat. Denver's been flat. Atlanta, look at that. Skyrocketed up back in 2022 and then been flat from there. Minneapolis, it's a linear market. Doesn't go up and down a lot. Same with Cleveland, I would say. Yep. Meanwhile, Los Angeles, where I was from last year. Look at that roller coaster. It's an all-time high right now. By the way, real estate can be divided into linear markets and cyclical markets. Linear markets is where the prices are not so volatile. You don't see all this crazy roller coaster up and downs on house prices on linear markets. That's where I usually like to invest long-term rental properties. That's why I'm in Houston, Texas right now. I moved here so I can be closer to the suburbs that I invest in that are linear. Not much in the main city of Houston, but real estate is hyper local. You can have a major city that's a cyclical market where prices are volatile, where it crashes and goes up and crashes. But then again, outside, like you drive on a suburb like an hour or two away, you get a linear real estate market. You got Washington, D.C., Charlotte. Chicago's not showing up. There's no data in Chicago. Got Portland, all-time high. So, look at that, San Diego. Home prices are so expensive in San Diego, guys. Also in Miami, look at that. We got Boston, Las Vegas, Dallas. I wish there's Houston here. Got San Francisco, Tampa, Detroit. So as you can see, the home prices really went up in major cities, like around this area, 2022. And then most of them kind of just went flat from there. Real estate is holding on for its dear life. And we haven't even hit a recession yet. Now, before we dive in to Houston's real estate market, let me say this. I am based in the Houston, Texas area. If you need a real estate agent here, feel free to reach me. And as I told you, transactions are at an all-time low. A lot of realtors are scrambling and I could really use a business. I'm just kidding. I don't rely on my real estate commission to make a living. I'm an investor first. And my passion for real estate is what led me to get a real estate license. I'm not here to sell you anything. If you decide to reach out, I promise to tell you the truth, give you the data that you need, and never push you to list or buy a house just because I need a commission. If you're looking for a caring and honest real estate agent, I'll leave my email down below at the descriptions. Now let's talk about the Houston, Texas real estate market. Yeehaw! Alright, so Houston real estate market overview. Days on market as of November 2024. Homes in Houston are averaging 52 days on the market, up from 48 days in the same period last year. This increase indicates a slight slowdown in buyer activity, giving purchasers more time to make a decision. It's pretty consistent with what's happening nationwide, that we are turning into a buyer's market. But we're not quite there yet. Inventory trends. Inventory in Houston has expanded to a 4.4 month supply, reflecting a 22.1% increase compared to November 2023. This growth provides buyers with more options and suggests a shift toward a more balanced market or a buyer's market. Price trends. The average home price in Houston rose by 4.1% year over year to a $418,903, while the median home price saw a modest increase of 1.5% to $329,990. These figures indicate continued appreciation, while the builders buying down interest rates doesn't show on the comps. Submarket highlights. Houston's real estate landscape varies by neighborhoods. Areas like the Heights and Sugarland have experienced higher than average price growth, with median home prices around $340,000, up 3.8% from the previous year. Conversely, some submarkets are witnessing slower appreciation or slight declines, offering potential opportunities for buyers seeking value. Whether you're buying or selling or just keeping an eye on the market, staying informed is one of the best moves you can make. For more finance, investing, real estate, and macroeconomics, let's all learn wealthy together. I'll see you in the next video. Yeehaw!